But first, let's get things started this week with a check on the markets. Central Valley Ag's Luke Beckman joined me on Thursday morning, and there was a lot to discuss, beginning with Luke's thoughts on current crop conditions, harvest progress, and early yield reports.
Yeah, harvest progress, Troy, appears to be pretty well close to average in Nebraska and across the country. So things are off and running. As you look at the forecast, we're going to have a nice open window here. So really no concerns as we look at the crop coming out. As far as yield reports are concerned, I think as you look at the Western Corn Belt, Nebraska specifically, a lot of your irrigated yields that are coming off have been quite good. I think that was expected coming in. I think some of the surprise has been some of the dryland yields. We certainly had, a tougher set of growing conditions this year with the heat and how dry we were. And some producers pleasantly surprised, I would say, on some early soybean and corn yields in some of those dryland scenarios. So it's really going to be a case of, I think the West versus the East. Both of those have been flip-flopped, I would say. I think folks thought that the Western Corn Belt yields would certainly be tough. And of course, as you get into the Dakotas, I think you're going to find a lot more variability. And you compare that to the Eastern Corn Belt where they've had some disease issues. Sounds like those plants have shut down just a little bit earlier than what folks hoped they would. And so I think test weight might be kind of a problem, and yields are a little more variable to the east and not quite what they were hoping for.
Then, Luke, you've got some export elevators in the Gulf that took a hit after Hurricane Ida. What's the latest there and the market impacts being felt?
We are definitely still experiencing impacts from Ida. It's really been a logistical change just from our typical harvest flow. This time of the year, that New Orleans market, you're certainly pushing a lot of product out of the U.S. in that export corridor. And so from what we can gather, you're still only at maybe 60% of capacity, and that's probably a best case right now out of the U.S. Gulf, specifically that New Orleans area. So what it's done is it's really redirected some of your trade flow. It's put more emphasis on other outlets out of the U.S. Those export elevators are certainly going to be working a little bit harder. They're going to be closer to capacity or at capacity. And so it's had some basis implications across the United States. And so if you're sitting in the Eastern Corn Belt, basis has certainly gotten soft. You just don't have that demand pulling bushels out of the U.S. through the river system like you would expect. And consequently, if you look at the Western Corn Belt or the interior, there's really been a strong pull for beans going to the Pacific Northwest. And so basis values for producers that are looking at cash bids, you've noticed that harvest soybean basis specifically in Nebraska and the Dakotas is probably a good 30 to 40 cents stronger than normal. And that has a lot to do with Hurricane Ida. But a little bit concerning that the U.S. isn't at full capacity right now with what happened with Ida. And we'll just have to watch going forward what that means for our export number that the USDA gives us.
So with everything you've said, how aggressive do we need to be with our selling and risk management as we move forward?
I believe, with what we just discussed, producers do need to keep that in mind as they look at soybean marketing specifically. We're just so dependent on exports. Now, I'm not sounding the alarm bells saying we're not going to export any beans. That's not the case. But if you're in a situation where maybe you really haven't started soybean sales, maybe you were in a dryland scenario where you were just unsure about production, as you harvest that crop and what you have, I'd really encourage producers to get sales on the books, especially if you can sell over $12 cash beans, which is where the market is today across the state. Those are really attractive levels and really, really good numbers. So take stock of your current situation. And if you just don't have a lot of sales on the books for soybeans, I feel like you should get to a comfortable level. If you've been more aggressive on soybean sales, you're probably in a position where you can wait. Still might be prudent to look at putting a price floor under some of those unsold bushels.
And then looking ahead to next week, big report from the USDA on the 30th. Remind us what that is and why it's important.
So September 30th, we will see the quarterly grain stocks report. That's an important set of numbers. It helps us finalize the old crop carryout, that being 2020-21. And typically that is kind of a market moving day, just because you're only seeing that report 4 times a year. If you remember last year, that was the big surprise, kind of the last domino to fall. that helped produce the big rallies. It was a very bullish report where grain stocks were cut by a pretty significant margin. As you look at next week going in, the cash markets really tell us what's going on. They tell us the truth about what's going on in corn and beans. So as you look at that, corn feels really tight. Producers have noticed some of the early drying incentives. They've noticed the big basis values and the big inverse being paid in the cash market for corn currently. So corn stocks, we expect those to be tight in next week's report, which is expected, but maybe we can find a bullish surprise there. Soybeans, on the other hand, the cash market was comfortable coming into harvest. We just didn't feel as tight as maybe we thought all year. And we'd expect next week's report to confirm that. So be ready for that going into next week on the 30th.